the practice of credit rating agencies during the financial crisis of they issued ratings on tranches of CDOs, collateralized debt obligations. So these are structured finance vehicles which are backed by most often RMBS, residential mortgage-backed securities, or different types of mortgage-backed securities. So, different tranches had different ratings. So a AAA-rated tranche would be the safest tranche, which would, promise, stability, but, a lower yield than a lower rated tranche, which would be riskier and offer a higher yield. So it's a trade-off, and investors would choose which tranche to invest in. But what was interesting here is that, the ratings agencies were operating under an issuer pay model. So investment banks were basically paying ratings agencies to rate tranches of structured products that the investment banks were issuing. The banks obviously had an incentive for the tranches to be more highly rated. So there was allegations here, and actually I had been investigating this back in 2010. There were allegations here that, maybe the ratings agencies have, inappropriately inflated the ratings on tranches of these CDO products because of, the incentives generated by this issuer pay. So i.e., they're not, the ratings are not accurate, they've inflated it just to win business.